Everybody, Josh Sigurdson of World Alternative Media here, and as we continue to watch the stock market plummet and then get pumped up by the Fed and plummet some more and get pumped up by the Fed, there's a lot of really big news out there that we want to cover in depth in this video to the best of our ability. Obviously, there was an emergency interest rate cut, as we have been predicting would happen, and it didn't really help that much. The Dow still ended up plummeting quite a bit anyway, and I want to go into some of the factors that play into this, because obviously a lot of people are talking about how, you know, the coronavirus set this up. What's that sound? Oh, right. I'm not allowed to talk about the coronavirus on YouTube, or else I'll get demonetized and shadow banned completely, and I'll go bankrupt. Well, I'm going to talk about it anyway because I might go bankrupt, but these things still need to be talked about, and we will continue to talk about all the stuff that gets us shadow banned and demonetized because it's our job to spread the truth. So make sure to check the links below and help us out any way you can. Anyways, people have been saying that the coronavirus is a reason behind all this. Now, the coronavirus is the nudge necessary to knock over the dominoes, but the dominoes were about to fall anyway. I mean, this was a completely bubbled, propped up stock market for a long time. Every time it started to go down, the Fed would print a bunch of money, flood the market, unofficially, of course. The plunge protection team would come in and prop it up, the $0 trading desk on Wall Street that the Fed has as well. And obviously, this will all come down on all of us eventually with inflation, poverty, and homelessness rising and all that kind of stuff. It's problem, reaction, solution, repeat for eternity, as they call it, the Hegelian dialectic. Let's get into this article right here out of Zero Hedge that says, "It smells like panic. This is not what Powell had in mind." And as the article goes into, commenting on the Fed's emergency rate cut, which, while expected, was extremely unusual and only the first one since the financial crisis, Obama's chief economic advisor, Larry Summers, laid out the problem Powell is facing, especially now that the Fed appears to have lost much of its remaining credibility. Wait, the Fed had credibility? Anyway, continuing on, it says, Fed risks scaring people with rate cut. My interview today on the Fed's emergency rate cut on Bloomberg. When you have limited ammunition, you have to conserve it. The Fed has limited ammunition with interest rates so low. Interest rates don't cure the coronavirus, and interest rates don't repair supply chains. And obviously with panic selling we're watching, the supply chains are not in good shape, and it's just a big red flag to us as a reason why we need to be prepared all the time. It's better to be overly prepared than underprepared. And I should note that we saw a 5.5% around there, a 5.5% interest rate drop between 2008 and 2012. The recession never ended. It was just papered over with vast amounts of printing, debt, etc. But we saw a drop about that much. And at current rates, I mean, we're going to be going far into the negative if they end up cutting rates to try and prop this up any further. It's just crazy, and it's obviously not working. We saw that it didn't work, and that should be another big red flag that we need to start preparing seriously, which we will go into further later. There's a lot of news in this video to break down, so bear with us. Let's get further into this article here. As it says, while Larry Summers' opinion has been repeatedly discredited over the years, he does bring up a valid point. Why is the Fed wasting half of all of its ammo just to delay what is now an inevitable crash? And why scramble with an intermeeting cut when it could have jawboned for the next 2 weeks and waited until the regular March 18th FOMC meeting? If anything, it would at least eliminate the sense of Fed panic from the equation. Instead, as it stands, it smells like panic, as more than one Wall Street veteran put it. Worse, as BMO's Ian Lingen puts it, what happened after the Fed's emergency 50 basis point rate cut, the biggest since Jerome Kerviel blew up Societe Generale, the situation didn't play out exactly as Powell might have envisioned. So just how bad is it? Well, as plunging stocks demonstrate, the Fed is this close from losing all credibility. And since the market has been held up for the past 11 years on nothing but Fed faith and trillions in Fed liquidity, this could be a very big problem. Lingen explains, the Fed's emergency 50 basis point rate cut brought 10-year yields to fresh record lows, and a zero handle was realized. To a great extent, we'll argue the situation didn't play out exactly as Powell might have envisioned. It's doubtful that when JP left home this morning, he thought 50 basis points will really crush the stock market, so it goes. The precipitous slide in equities was the driver behind the ease to begin with, as the spike in equity volume translated to tighter financial conditions via this now well-traveled path. This is where it becomes problematic. While stocks initially rallied on the good news of rate cuts, the optimism quickly faded as the intermeeting nature of the move raised more questions than it answered. On one hand, the Fed is willing to be proactive, but on the other, how much more will rates ultimately need to be cut? If the FOMC wanted this exercise to be a one-and-done event, that message wasn't correctly communicated to the futures market, which presently has roughly 60% odds of another move in 2 short weeks priced in. Admittedly, the 100% probability for the next cut being a quarter point is worth a nod. Given the way in which risk markets are responding to today's half point, it's challenging to imagine a 25 basis point move would be met by the warm risk-on embrace to which monetary policymakers have become accustomed. We'll stop shy of labeling it a face-in-hand day for the Fed. If nothing else, the question of whether or not just 50 basis points would suffice has been answered. Hint, it was no. The biggest risk was always that by acting too proactively and aggressively, Powell would signal that the situation is worse than initially feared. Check. With 10-year yields on a slippery slope to 75 basis points, there, we said it, and twos conceivably poised to touch 50 basis points, it's somewhat concerning that the 2s and 10s curve hasn't steepened out anymore. 34.5 basis points remains the line in the sand. The rationale for the reluctance to steepen is sound. Lower rates cannot cure the coronavirus and are unlikely to fully offset the hit to consumption, confidence, and inflation. As a result, the accommodation only created a muted inflationary impulse. So we're going to get into this to a greater extent right away, but we've been warning about this for years, and we were talking just like, about a year ago about the issue with the Treasury bond yield curve. I mean, it's something that we were called stupid and crazy for forever, and saying that we're Chicken Little and all that kind of stuff. But it was just basic. It was basic economics. It was basic market fundamentals. And the fundamentals in the actual stock market aren't there. You see like maybe 2% good stocks out there, and there are good stocks, but the majority of it is like a bloodbath. It's ridiculous. It's just propped up and printed currency, nonsense speculation, desperation moves, and trying to make a quick buck when it's one thing. You can bet on markets, fine. There's speculation. Speculation actually helps markets in a lot of ways, but only to a certain extent. When it gets so out of control and stupid, as we've seen, you end up with a massive bubble. And like the dot-com bubble, there were good companies in there, but the vast majority were terrible. And we see that with the tech companies today. Twitter, Facebook, YouTube, all censoring people like they're censoring us. Again, press like on this video and check the links below. Help us out. We see nothing good coming out of them. They need to keep creating things to be able to prop themselves up and sustain themselves, but everything they create is terrible, like Libra, and everything they do takes away from the user experience and censors people and insults the people that are watching or using these social medias. That isn't a sign of a bullish market that's just in its beginning stages. It's a sign of a dying market, and we are seeing people decentralize and move away. And there's obviously a bunch of trouble lately on Twitter with Jack Dorsey and people trying to push him out, and this really anti-crypto guy coming in and everything like that. There's all these problems with and even in the independent social media world, Steam had a hostile takeover the other day that resulted in a lot of controversy regarding centralized exchanges taking over the Steam blockchain and all that. There's problems everywhere. It's a very desperate time, but we cannot help but mention, like, just 2.5 weeks ago, we did a video saying the stock market is imminently at risk, and people said you're stupid. And then literally a week later, we saw the worst week since 2008. And then last week we said, you know what's going to happen? We're going to see them try to pump money into the economy, just pump a bunch of money into the markets at the from the Fed, which is going to cause more inflation, which is actually going to do a lead into Bitcoin and gold and stuff like that as a safe haven. Not right now though. And what happened? That's exactly what happened. And then Tuesday we see it go down again as the Fed does an emergency rate cut. These rate cuts we've been talking about for a long time. We've been talking about the lead up to negative interest rates since they were trying to prop up interest rates. Years ago we said this was going to happen and no one believed us. It's about time that people listen to us because we keep getting vindicated and we're trying to help people. I know many of you listen to us, continue to listen to us, even though they don't notify you or show you that we're posting these new videos on a daily basis. I know many of you have been very supportive. I really appreciate that. There's many though that have just been attacking, not watching, not listening, and saying, closing their ears, eyes, and mouth. And I mean, this is incredibly important because it affects every person living. The value of the currency, the crash of the stock market, food rations, supply chain breaking down, dollar crashing. That's all something that affects every single one of you, and it's important. Let's get into further articles here. As this Zero Hedge article says, the next economic downturn may last forever and a day. And as the article goes into, based on how Japan has fared over the last several decades, it is difficult to see the green shoots of a global economic spring forth as a result of lower interest rates. In fact, the next economic downturn will likely envelope the planet and may last forever and a day. This is because central banks' intervention and manipulation often carries with it negative unintended consequences. People often forget how lucky Japan has been during its trying times to be located next to China. Because of China's years of booming growth, Japan has been able to mitigate much of the pain that occurred when its economic bubble burst in 1992. In the decades since, Japan's stock market has never again come near the lofty peak it hit back then. During the last years after Japan's fall from grace, it was able to soften the impact of its economic problems by strengthening ties with a rapidly growing China, which needed help in developing its export-driven economy. Today, many people feel the global economy is in a bubble eerily similar to the one experienced by Japan before its implosion. The question is not whether the market and economy are about to undergo a massive reset, but when. Concern is also growing as to how deep, painful, and long the next downturn will be. A huge factor in the world trudging forward following 2008 is a massive growth in the money supply and debt over the last several decades, exactly as we've been talking about, by the way. This growth in debt and credit has exploded, making the financial sector a far bigger part of our economy than it should be. The economy has become more about asset values than solid growth in production. This has added to inequality, and this does not create a healthy environment for investors. Much of this trend has been predicated on central banks continuing to move interest rates lower and lower. While rate cuts may temporarily mask economic weakness or halt declining asset prices, they come at a price. This can be seen in the way they destroy true price discovery. Following the financial crisis of 2008, governments and bankers have joined together to form the financial political complex. Years ago, President Eisenhower warned the American people about the industrial-military complex, or military-industrial complex, but nobody warned us of this new threat. Instead, we were told to embrace the closer ties between the bankers and government officials as a good thing. While this evil alliance halted and reversed the carnage taking place in the stock markets, it did little to solve the core issues we faced. In fact, by allowing the government to ignore and avoid necessary reforms, it has made them far worse. We have dodged many economic challenges since 2008, and the so-called economic recovery grew long in the tooth. Time after time, the creative folks that make up the financial political complex have been able to pull rabbits out of their hats and manipulate asset prices even higher. This has extended the illusion that all is well. Today, they are faced with a new challenge, the coronavirus. It has battered markets as it spreads across the globe. This monster has halted travel, put hundreds of millions of people into weeks of lockdown quarantines, disrupted supply chains, and respects no borders. And that's something I want to go into quite a bit here, because this is a major factor that we are facing right now, the coronavirus outbreak, which, oh wait, Here we go again. I hear the siren. Yeah, okay, all right. I'm not allowed to talk about the coronavirus. Again, I'm going to. And if they want to bankrupt us, well, hopefully the viewers help us out by checking those links below and keeping us afloat somewhat. Anyway, as this article says, World Bank pledges $12 billion to combat virus outbreak. I'm sure they have no ulterior motives at all. The World Bank always has our best intentions in mind. As it says, the World Bank announced Tuesday afternoon that it would fund an initial $12 billion in financing to combat the COVID-19 outbreak that is threatening to plunge the global economy into recession. The virus has now spread to 60 countries, infecting more than 92,000 people, resulting in 3,100 deaths. Breaking, the World Bank Group is providing up to $12 billion in immediate support for countries coping with the health and economic impacts of the COVID-19 outbreak. World Bank President David Malpass said there are still many unknowns about this fast-spreading virus. Malpass said more aid could be required in the future, and I quote, "We are working to provide a fast, flexible response based on developing country needs in dealing with the spread of COVID-19, he said. This includes emergency financing, policy advice, and technical assistance, building on the World Bank Group's existing instruments and expertise to help countries respond to the crisis." He called on the global community to coordinate efforts to limit the transmission of the virus, indicating that the faster everyone acts, the more lives can be saved. And you know how I feel, but I believe this is, on one side, completely fear-mongering, on the other side, weaponized and meant to hurt as many people. It actually helps the economy as far as social security goes. It's a terrible thing. And also, I mean, people are on lockdown. People are voluntarily committing themselves to FEMA camps, essentially. People are quarantining themselves. Martial law in many places runs on all these stores, stocking up on foods and goods, which I think was about time anyway. Obviously, that's going to happen one way or another. But then at the same time, you have all these movements around the world stopping and standing still. You have the yellow vest standing down because France has banned public gatherings. I mean, it's just gotten so out of control. Hong Kong, what happened there? I mean, obviously, as the world was on the brink of rising up, all this stuff happens as the economy falls, as the stock market falls. It's very, very convenient. And as the latest news basically says, Purell run starts, sold out across the country amid a pandemic fears. And of course, this one here, majority of coronavirus deaths reported outside China for first time since outbreak began. Live updates, and it shows a whole bunch of the latest facts regarding the coronavirus and how many people in the United States and elsewhere have been affected, mostly on lockdown. But I mean, most of these people are also senior citizens as well, which needs to be pointed out, and not enough people are mentioning it. It's affecting nursing homes in Washington State, and people keep dying, and then they're like, well, a bunch of people died. Well, let's put that in the headline, at a nursing home. So obviously, many colds, many flus would affect them. I'm not saying you shouldn't be worried. Everyone should be prepared. Everyone should be doing something about this because it is likely being weaponized here. But I mean, I think people are not keeping certain things in context which are important. Now, again, I think that this was just a nudge that the markets needed to come falling over. And obviously, as we see, the rate cut isn't helping. So we're left with nothing else but to consider they could prop this up further. They might not be able to, but at the end of the day, that shouldn't matter. You guys should be preparing yourself. You guys should be looking towards the same things that we've been talking about for years here at WHAM. Food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Gold and silver as wealth insurance, in my opinion. Not investment advice, of course. It's not mentioned as investment. It's wealth insurance. And on top of that, you know, decentralized, properly, fundamentally useful cryptocurrencies, privacy coins, and blockchain infrastructure technology. Be very careful with that. And, of course, always do your own due diligence. Again, not investment advice. You can look to an advisor like Tim Pachote, who works with us here at WHAM from time to time. Tim Pachote saved his clients and made them 181% on the downside during the recent crash. He specializes in dealing with crash scenarios and gets a ton of a great result on the upside as well. So make sure to check our videos like the greatest economy ever debunked, where he does a speech at TDV, and go to thelibertyadvisor.com and book him as become a client of his, because he would be a very interesting person for you to look into if you want to deal with this in the best way possible. But again, personal responsibility and freedom play hand in hand. You can't have one without the other. Be responsible, be independent, be self-sustainable. It comes down to you, folks. Don't wait for someone else to save you. It comes down to you, and you have to act fast, because this isn't about fear-mongering. It's about solving these problems. We have to solve them. There's more solutions than there are problems. The money is printed out of thin air, forced on us via the social contract, which you never sign. It creates inflation, and the more money that's printed, it creates more debt. We end up paying off the interest on the debt. The interest on the debt is a massive chunk of your taxes that are stolen from you. Taxation is theft. Government is organized crime. Legal tender laws are a very, very forceful scam, one of the greatest scams we've ever seen in history, and we need to break free, and we need to break apart from that. We need to decentralize. We need to be responsible and self-sustainable, and stop worrying about this stuff. Understand it, be concerned, but do what we can to solve this problem. And again, there's more solutions than there are problems. So again, stay safe, stay healthy, and what else can I say here? I really hope everyone took something from this video. Make sure to check the links below, press like on the video, comment what you think, and of course, help us out any way you can. I mean, we are being demonetized and censored. The second we post a video, it's demonetized. Join us on flote.app, flote.app, and check out those donation links below. Anything is appreciated. Check the outro of this video coming up right away. Anyway, I appreciate everyone joining us. Until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change, and end the Fed. Like what you see here, don't forget to check the links below. GoFundMe, Patreon, Subscribe Star. We really can't do it without you. We've been so insanely shadow banned, about 90% at this point, and 95% demonetized. As Susan Wojcicki, the CEO of YouTube, comes in and says that she is shutting down quote-unquote controversial content and cutting out the views on this controversial content by 70%. She's been bragging about it. We need your help more than ever in this battle for truth in information. You guys are what keeps us alive, so we really appreciate just even $1 a month makes a huge difference. If everyone could give just $1 a month, we wouldn't even have to worry about competing against the mainstream propaganda networks. You can also donate to our Bitcoin address on the screen for you to scan if you please, as well as in the comments and description. Liking and sharing makes a big difference as well, and finding us on alternative social media platforms like flote.app, that's flote.app, makes a huge difference. We're at Josh Sigurdson as well as at Wham. Flote is replacing Facebook, YouTube, Twitter, Twitch, Tumblr, Reddit, and Patreon all in one with encrypted private messaging, and of course monetization on videos for creators, live streams with super chats in crypto, and most of all, no algorithm, because at the end of the day, it's all about reach, guys. This is all about actually reaching people with the message and waking up the public. You can also find us on Instagram, Twitter, Minds, BitChute, all sorts of different platforms. Try to follow us on as many things as possible, because very soon this channel will very likely just be completely deleted from YouTube, and you'll never see us again, and you'll be stuck with only the mainstream networks. Also, come on out and see us at Anarcho Vegas 2020 in Las Vegas, Nevada in July, where such speakers such as G. Edward Griffin and many others will be speaking. You could use promo code WHAM on your VIP tickets and save 10%, as well as buy extremely cheap tickets for just $20.20. You won't find a cheaper conference than this with such amazing names. Check anarchovegas.com for more information on that. We hope to see you out there. And anyway, I really appreciate all of you guys joining us. You make it possible for us to survive in this volatile, propagandized climate. Until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.